Oil prices haven't been this low in more than 10 years. Average U.S. gasoline prices are now below 53 cents per liter, an early Christmas present for motorists.
I remember 1 year ago, I had to put around $50. Now, maybe with 36 or $38, I fill it on my car.
It amounts to a $115 billion boost to the U.S. economy, or a yearly savings of $555 for every motorist, says AAA spokesman Robert Sinclair.
And we think that's something that's going to continue. Plenty of crude oil supplies still remain. Crude oil futures are pointing to even lower prices as we're going forward in the next month or so. So we could see prices drop another 25, 30 cents in the next month.
For oil-producing countries, the price declines have been a lose-lose proposition, according to economist C. Fred Bergston on VOA's #VOA program.
The Russians lose, the Saudis lose, the Venezuelans lose, U.S. oil shale producers lose, but that is more than offset by the net reduction in consumer costs.
Because most commodities are priced in U.S. dollars, some blame the higher exchange rate for price declines. But New York analyst Peter Cardillo says it's just supply and demand.
If you have lower demand on a global scale, and then you have overproduction from producing nations, it's obviously that you're going to have a crash in oil prices, and that's exactly what's happened.
But it's a price plunge with serious geopolitical consequences. A case in point, says Bergston, is Russia.
5 to 10 years ago, when oil prices were very high, Putin was riding high. Now, with the energy price having collapsed as much as it has, he's had to pursue foreign adventures, Ukraine, now Syria, other things, to try to divert his whole population's attention from their very poor economic circumstances, driven in large part by the collapse of oil prices.
Oil prices are not likely to rise anytime soon. New projections from both the World Bank and International Monetary Fund suggest prices will fall further to as low as $20 a barrel in 2016. Arcega, VOA News, Washington.